Today, we're going to discuss the outlook of gold, bonds, and dollar yen, which are showing a high level of pessimism from investors. Then I will show you the chart of VIX and the S&P, and we'll end with Brent. So the first chart, I already showed it to you last week, is the gold bonds. So I discussed the breakout we saw on this point and figure chart, which was a quite bullish signal. And what we have seen since last week is a continuation of the rise of gold prices. They are now approaching from the first target, which I discussed last week on a chartist pattern, which is at 1375, 1380. And yet, as you can see on the point and figure chart, this market can go even higher in the medium term. So the outlook, the bullish outlook is confirmed on gold. On the other hand, what we are seeing is also a breakdown of US bond yields below 210. So this was an important support level. So the scenario which is taking place is a quite bullish scenario for US bonds. So an unexpected breakdown below key technical supports. The next support is at 2%, but I think in the medium term, I still think that the risk is to make a V-shaped recovery. So a kind of false breakdown, panic buying on US bonds, then a reversal. The same scenario is occurring on German bond yields. So this week, German bond yields are breaking below their 200 moving average. So the big question right now is if it's a false breakdown or if the breakdown will be confirmed. So which means a drop below 0.30%. So in this case, we can see panic buying on Bund, a drop to 0.20%, and once again, after that, I would expect a V-shaped recovery. The last chart, which is on a critical support, is dollar yen. So dollar yen is testing once again an important support zone around 108, 109. So this time, I don't really like what happened last week because there was a first target for the technical bonds at 111. This level was not even reached. We are back on the critical support. So this time, I think that could be a breakdown. So break below 108 is becoming more likely. So in this case, 106.50 was the next Fibonacci support would be the downside risk. So once again, always the same scenario, a kind of buying on Japanese yen, then a reversal. Now, if I discuss the outlook on VIX, so markets are much more complacent on equities. Anyway, I noticed last Friday a daily setup 9 buy signal, so which was a contrarian buy signal for implied volatility. This signal was quite good because on Tuesday we had a bullish gap on implied volatility, and implied volatility remains significantly above last Friday's lows. Which means that we may have seen a volatility low last week. So what I would expect right now is more a limited pullback than a new rise of implied volatility, which means that probably markets are a bit too bullish on equities right now. The outlook of the S&P is quite difficult. It's still quite difficult because the S&P is still locked in a trading range. Big squeeze last week, but start of a new pullback on Tuesday. So the outlook of the S&P remains, the technical outlook remains unclear in the short term and bullish in the long term. So it's still a difficult chart to call in terms of direction. Anyway, I still have a slight preference in the short term for a continuation of the range or even a pullback to the lower part of the range around 2400. The last chart I wanted to show you is the one I put in my weekly report yesterday. So this is the correlation between gold prices and the S&P 500. I noticed that so the gold prices are now up 10% over the last 40 days, which is around 2 months. So I looked at the previous gold rally combined with equity rally. What we notice is always the same pattern. Usually when gold is rising in line with US equities, the outlook is becoming unclear after that for the next 2-3 months. And usually we have a kind of difficult market condition, consolidation process, so it depends. But this is what could suggest the recent rise of gold prices, so a continuation of a difficult trading range or consolidation process on US equities. So the last chart I wanted to discuss with you is Brent. Since a couple of weeks, I was expecting an upside breakout on Brent. So this is the scenario discussed in my weekly report over the last few weeks. So this breakout is becoming reality. So Brent held above 50 and is now breaking above so the upper part of its triangle. So the upside target, the next one is 55 in the short term, and my point and figure chart even suggests a continuation of the rally to 58 spot 50, which is a potential upside target according to my short-term point and figure chart. Thank you for listening and have a nice day.